Good night, folks. So we are Tuesday, 3 of June. So my daily review of what's happened today on CISO. Like I was expecting, but hoping not, but a little bit expect. We have been barcoding the whole day. Basically, that's a kind of normal thing, especially on this kind of volume. After you have a big shakeout, remember Friday, a big, enormous dump from 1.4 to 60 cents on no real news. I mean, no dilution, no ATM. So it's kind of violent as a drop without news. Then the rebound from 60 cents to 85 cents. And then Monday, little bit people buying in a hurry on 6 million in volume, basically bringing the price from 85 cents to $1, roughly. And now we have a very, very low volume day with basically a trading range from 97 cents to roughly 1.4, so it's very, very tinny. So the only thing we have in our hands here is the chart and the moving average to try to understand what's going on. Well, naturally the compliance news was priced in because the market it was not a discovery that CISO was compliant. That was well known 1 week ago. So no special reaction to that. Maybe some retail, but not more than that. Now, I want to underline something. I was looking at the level 2 the whole day, and we can say now market maker can manipulate, but we can say that we have a pretty strong retail commitment in the stock, and it's not very familiar in the penny stock area. We can see here that there is some retail who really keep their shares. There was a moment like 10-20 minutes without a trade today. It was very difficult, even if you want to day trade. I was doing that, buying at 98, 99, sell at 12, 13. But, the difference are ridiculous, so it's not very interesting. Now we are kind of at the crossroad of the story. Let me begin with the bad part. The fact we are under this green line with the 20 EMA at 106, naturally it's a big resistance. It will take some kind of volume or news to go above 106. That's for sure. Now, the floor. We have big support at 96, 97 cents, the 200 moving average, with normally a very strong support, especially when you just come out of a big volume day like we have at the beginning of May. And we have the channel, the low side of the channel, who go in the same direction to join roughly the 200 moving average, a little bit under. Personally, what I think is that until we have news, some kind of news, or something to attract retail, new retail, we may test this area of 85 to 90 cents. It's not impossible. It's not impossible. The fact we are under 20 EMA mean that we are clearly not, over the limits or with the RSI very hot. That's not the problem we have here. The problem we have here is to find the floor and have some positive news to extract CISO from the $1 to $150 area. But actually, if we look at short term, it will take some volume to go above 106. It will take some volume. Today it was a very low volume day, I mean under 2 million. After the big shakeout we have the last 2 days, it's not a lot, because normally you have a lot of people going in and out. Remember, everybody who buy at 75, 80, 85 Friday, they are very green here at $1. They are very green. So if they don't see it moving, they sell. So I suspect that market makers are waiting to have all the day traders who buy Friday in the dump. They are waiting that they exit slowly. Vast majority exit Monday. And we can see that today there is very, very few who remain. The volume was so low. So low volume is good and bad. It's good because that means we have no sellers. It's bad because that means we are not attracting new buyers. But it's a good base to wait for some news. Hopefully as soon as possible. Whatever. I don't know. But news. If we don't have news, now that we are compliant, this and that, the only thing we may expect is short covering or short to see that we don't go down anymore. And that's it. So we need to find the floor, and I don't really know where is the floor. It may be at the 200 moving average, 0.97, or it may be at the low end of the channel with around 0.85. And if we go there, it will be even more difficult to go up, because we will have the resistance, the 200 moving average, will turn from support to resistance. So it will take even more volume to go up. So this is a kind of stock who go by wave. The first wave was, let me see, don't have the exact time frame, but the first wave was around the 14th of April, March, excuse me. April, okay. 14th of April, that was the start of the first wave. And the wave ended on a 4-day drop, then stabilization around the 20 EMA. I mean, if we see the movement before the big volume day, because that was an anomaly, basically the run began the 14th of April from 35 cents. We touched like 60 cents. So we crossed the 20 EMA, we retest the 20 EMA, then we go above and then we go under. At a certain point, when it was under the 20 EMA for like a week, I'm going to look at another way because it's not precise, so I cannot. Let me see. Yeah, so the 2 and the 2 of May, we were under the 20 EMA. Then the 5, we cross it on low volume, and then boom, big volume day. So if we have, remember this, that's the important point. If we have a close above 106, that will mean that we have a run was coming. Until we stay under 106, that's mean we are in a danger zone, because it's a zone where you don't know if retail will be patient or not. Remember, the stock have a lot to do with retail. It's a little bit like back in time with Clove that I used to follow. Clove was a stock who was owned by a vast majority was retail. So retail is good and it's bad. Let me explain. It's good because that's mean that when retail come in, basically, how can I say? When they buy at a high price and the stock is going down, a lot of this retail can choose to bag holding and keep their share and wait. If it's an institution, they have stop loss order, they have quarterly earnings documents, they may sell automatically, stock that go down too much. So you have movement or a little bit strange like that. When you have a retail base like in CISO, it's a kind of commitment. If the retail trusts the CEO, trust the story, and see that basically we are going in the right direction, they keep their shares. That's mean that market maker have difficulties to find shares. The bad part is that if the retail are weak and are flip-flopping a lot, there is no problem to sell if you buy. I mean, when I sell, I buy. So I'm not selling and I stay out of the stock. I may go in and out, but I keep my shares. But you have some person or retail who just sell and run away and go somewhere else where there is movement. I think in this stock we don't have a lot of this profile of retail. How can I see that? The day after we jump on 66 million in volume, the price continued to go up without dropping. That means there was very few day traders in this. It was more kind of retail commitment that have done DD and know what we are talking about. But now we are in a zone that I don't really like, because it's tricky. We are stuck between 106, with an important resistance, and 0.97 with the big support. So which way we are going to go all depends. If the market makers see weakness and see people ready to sell, for loss, or taking profit because they have been buying at 77, 79, they may take advantage and push the price down. So all depend. If retail keep their share or buy the dips, that's another scenario. But they will do that until they see we find strong support and that the volume is very low. Until they see some selling pressure. Well, today volume is not selling pressure, but it's not buying pressure either. So, it's tricky. It's tricky, and I really hope, if they are smart, that CISO release some kind of news just to push this above the technical 106, because that will bring a lot new buyers. But until technical retail don't see we cross 106, they're going to stay on the sideline. So it will be all about how retail keep their shares or not. And hopefully, we don't have a short attack like last Friday. Well, it will be difficult because the price now is a lot lower. Friday it was 140, so it was very easy to attract a lot of sellers because the stock come from 35 cents. So imagine 35 cents, you are at 140, you put a stop loss at 120 and another one at 1, and bam, 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 they bring the price down and they explode all the stop loss order. And people get out with profit because they have been buying at 30, 40, 50 cents. They sell at 120, $1. They are okay with that. And market makers see that and they take advantage. They have tools that we don't have. They know very well the support, the buying pressure, the selling pressure. They know what's going on. And Friday, they do that because they see it was possible. Then they test two support zone, $2 and $1 area, and the other one at 95, I think, or something like that. And the two times they crush all the stop loss order. Because so many people have been buying low, they put stop loss order to protect their profit. I understand that. But market makers take advantage. So, my view, we have a kind of floor at 85 cents. We have resistance at 106. We have the 200 moving average at 99 cents. I hope we keep the price above the 200 moving average. If that's not the case, we may see something around 85 cents. But all that depends, volume, news, I don't know. But I will feel better if we will be trading above 106. But that's like that. Now it's a resistance, so we need to deal with it. No choice. Not a lot more to say. I've put some dry powder to take advantage of any weakness. If there is some kind of dump or sell off. But actually, like I was saying yesterday, they keep it in a kind of barcoding, so they avoid runners and they avoid buy the dips candidate. I know a lot of you was ready to buy at 95, 96, 97. It was very difficult to get shares over there. So let's see. The best scenario, we have big news. We cross 106. In that case, we're out of the wood and we go in the direction of the $2 zone. But right now, without news, it's difficult. Wait and see. Thank you.